Good morning, guys. Welcome to the new week, March 17th. Going into the second half of March. Almost the first quarter is done. 2 more weeks, and we're going to wrap up the first quarter. Getting into a week, which is probably dominated by the Fed meeting. Yeah, Fed meeting starting on Tuesday. And the news this morning, we have actually retail sales, the big number coming out at 8:30. Also Empire State manufacturing. We have business inventories and housing market at 10. Fed meeting begins tomorrow. We also get housing starts, import-export prices, industrial production tomorrow. Wednesday, we get the announcement and the press conference. Not much news before that, so that's going to probably be what dominates that day. Thursday, jobless claims, Philly Fed, existing home sales, leading indicators. Friday is quadruple witching. So big item for this week is going to be the Fed meeting, and also we're getting us closer to the end of the quarter. But we'll see how this whole thing pans out right now in terms of continuation from Friday's little buying opportunity. Or there was a pretty good little run up here on Friday. So you can see they started taking this. It looked to me like they had a pretty good shot at doing something. And the biggest question from Friday was really, are we going to see continuation to the upside, or what's going to happen with this? So at this point, we started off on the long side going into the overnight Friday, into Sunday, Monday, and so far the overnight has pretty much been holding just steady. It hasn't been really a move to the upside. It's been kind of holding sideways. They're down here, reverse retesting the 5650s. Haven't really taken it a whole lot lower than that, but we'll see. Right now, it's kind of just holding here. So if they start off the day and they just run right back down again, then yeah, well, finally we're back to where we were. If they can hold on to these gains and stay above that 5650s, I think we may have a shot maybe at squeezing it back up to this 5760s, and then the possibilities may start opening up. We'll see. So at this point, it's not obvious what's going to be happening, and one day doesn't really make it. But we had a pretty good Friday in terms of moving this higher. Nice little pop, and question is now, are we going to see continuation of that? We have the retail sales number. That's could be an interesting read. If that's a good number, we can probably see the market hold on to their gains. If it's a bad number, chances are we're going to be right back down again. But to get started, I'm watching this edge here, the 57.30 to 40s. We talked about that a few times. If they can get up above that one, I think we're in pretty good shape. That's again the same support area, or it's resistance now. But there used to be support down here at the 57.30s, and if they can get up above that edge, I think we have a pretty good shot at potentially reversing this. I'm just going to say potentially right now because it's still pretty volatile, and you never know. When you get another headline, another tariff, another something happening, and the market throws a little fit. So at one point, I guess the market is going to start figuring out that reacting to headlines is not necessarily the best thing to do. But so far, algos are just doing that, and they run it high, run it low, and it's just it's a game you can make money on. I mean, it's as retail traders watching it. If we see that start happening, I mean, we can certainly trade it. The issue with trading days like that is the volatility and being able to stick in a trade. So we'll stick with it. But look at the buy weakness this morning, at least to get started. To get the 56.70s, 56.50s for rotations back up again. If they start trading below the 50s, I would probably give it one more level down at the 40s. So one level outside the obvious 56.40s. And if they take out the 40s, we are back on that lower end again. So back in that lower range again. So look at the buy weakness at 70s, 56.70s, 50s, and the 40s for rotations back up. Getting short against resistance at 56.90, 5700, 5710, 5720, 5730. All those are potential short opportunities. And remember, you had to get up above this edge at 30 and 40s. That's your upper edge. So anything up here on the way up, these resistance areas could potentially hold and could potentially set up a nice short trade for a rotation back down again. So if we see early strength, they start pushing this higher. I would stay on the long side, look to buy weakness and see how far they can take it. Just being mindful that any of these resistance areas potentially could hold and potentially could reverse the market. So until they can clear that upper edge, the 30s and 40s, I would not be very aggressive on the long side in terms of the big trades. And I would just be mindful that these resistance areas could certainly hold. And you can certainly, I mean, this could just be a probe to the upside, in which case you'll find that one of these resistance areas holding, and then just to knock us right back down again. But to get started, given that little pop we had on Friday, you're going to be looking for continuation to the upside. So look at the buy weakness, at least to get started. And let's see if we get some strength after that, or if we may just get strength from the get-go. It's just anyone's guess how that's going to develop. So, but we know how to deal with it. And I would not be looking at us just reversing back into a bull market or to a capital flow pointed higher until they start really taking out that 57.40s. At that point, I would start considering the capital flow as potentially changing direction and we potentially having a move to the upside. So that's how we get started on the ES. Looking at the bonds and the note, bonds and NASDAQ. The bonds and NASDAQ. Bond market pretty much holding in that range. I don't think there's not much going on that guy in terms of direction of moves right now. We've seen him building value around about the 1720s for quite a while. They've been probing to the downside. Pretty clear volume edge here at 116 right now. And that corresponds to that attractor. And below that one, I think running it down to the 114.26 is going to happen. They have a low volume area at 115, 114.24. So an attractor area. So at this point, just starting off range bound on the bonds, looking to trade back and forth in this range, trading up to the 118s down to the 116. So between 116 and 118 is where we are trading. And they start taking out the 118s, start looking for a move to the upside. They start taking out that volume edge of 116. I would be looking at moves down here to that 114.20s. So that is the move. That is the bonds to get started. So initially looking to sell strength, 1706, 1712 up to the 1723s and the 17 or the 118s. Looking to buy weakness, 11620, 1615s, 1604s down to this 116s for rotations back up again. So that's a range. 3 or 4 levels up, 3 or 4 levels down, and we are right smack in the middle of it. So we'll see how that thing shakes out. But that's how we get started on the bonds. Given the overnight, maybe look for early strength to get started. But again, looking for short setups against these resistance areas. On the NASDAQ, also had a pretty good move. We'll see if the big techs are going to make a big tech comeback. That's going to be the next big thing to watch, right? So at this point, retracing a little bit, heading up towards this area, the 20,000s. And it can get up above 20,000. I think we may have a shot at, and you can see here, NASDAQ is a whole lot closer to get up to about the 20,000. That reverses that support area. So if NASDAQ can get up above it, the 20,000s, I think NASDAQ can get into territory where we start grinding this higher. And if that starts happening, yeah, that could be a pretty good, pretty good start of the week and starting to take this higher or reversing this crazy downward trend we've been in. Because that's been the NASDAQ down to the 19,000. That's 3,200 points to the downside. That's a good 15% on the NASDAQ. That's pretty good. That hurt, put it that way. You're looking at your 401ks. So watching that 20,000. So starting off, looking to buy weakness. 830, 840s, and 780s, or 770 to 780s down to that 7730s. So looking to buy against those support areas. So 19830s, 19760s, 19730s for rotations back up again. And on the way up, looking for potential shorts against the well, the 900 could be there right now, trading right below it. The 950s, 20,000s, 20,070s. These two areas of resistance, the 20,000 and the 20,070s, could be the better ones to get short against. You just have to wait and see what it looks like when we start approaching them. But this is the edge they need to get up above, and if you can do that, I think we may be in a good spot to potentially take this higher. So we'll keep our fingers crossed that they can get a little bit of momentum here to the upside. Everything's been so oversold on the Nasdaq, so snapping it back a little bit there, I think could be a pretty welcome move. But you see the range on the Nasdaq if you look at capital flow here. I mean, they were down at 19,000. We are down to the 800, so rotating back 700 points to the downside. They've been testing support here for a bit now, probing to the downside. So I'm going to get a little bit hopeful that we may have found the bottom finally. Doesn't need to be the case, but I'm going to be hopeful about it. All right, so that's how we get started on the ES and Nasdaq, so you can get some continuation of Friday's move to the upside. Finally, oil and gold. So gold, after the 3,000, they're just kind of holding. They priced themselves higher. Nice move to the upside, and they are since just kind of stalled right there. So nice move out of the middle. Yesterday did not they continued Friday. It's an extension to the upside. So we're still in stage one. Let's see if we can get to stage two today if they don't extend to the upside. Watch these lower areas, the single print F here. If they take out that 2986s, 87s, I'm going to be looking for a retracement trade, and they can take it down to the 77s. They can take it all the way down here to this 2965s again. Reverse retest that low volume area at the 2965 to 70. So that's, you see that 60, you have 74, pretty obvious. Yeah, that's the same area. So this is the area, the pretty good low volume area, a little bit of a volume edge. And they can certainly retrace it all the way down here, or potentially reverse retest that 2963.65 area. So we got some moves to the downside on gold potentially if they start taking out that 2985s or 86, 87s. But to get started, looking to buy weakness, 95s, 90s, down to that 86, 87 support area for rotations back up. And on the way up, not going to be very aggressive on the short side since we are still in that move out of the middle to the upside. But just the 3,000 number is a pretty nice and even number. Finally, they hit it, and I would not be surprised if we see a little bit of a pullback here. And look at that. They grinded higher and overnight. They reversed everything here pretty quick. So let's see how that shakes out. But anyway, so I'm thinking they're going to stick around the 3,000s here and build value for a bit. But they're still in stage one. And right now, it looks to me like we may be getting into stage two if they're going to start pulling back here. So we'll find out here as the day session kicks in. But I would start trading that from the long side of the market still until I see them start retracing. And then below that 86, 87, I would be looking for a potential short go with type of trade to the downside. And oil on the 17th, today's the last day on the April expiration. We roll into May after today's trading. So on oil, but I would say range band oil, it's not been a lot of movements on oil. I haven't really looked a whole lot at it, to be honest with you. It's one of those which when it moves, it moves. I had a nice pop here early on this morning, and then just it's last night, and then we're just drifting lower from there. So as they're starting to hit the hoodies now, so I mean, I guess a little bit of concern about that one, but we'll see how this whole thing starts shaking out on the upside here. But it's but at this point, looking for more range bound trading on oil, looking to sell strength 68.20, 68.40s. Again, if they get up above that 68, we probably can trade up in this upper range again after that probe to the downside. So above 68, I would look for a move up here to the 69.50s. And they're looking to buy weakness, 67.50s, 67.20s, 66.70s for rotations back up again. Maybe down to the 66.30s. We'll see how far they can take it on the downside. But at this point, that's kind of what it looks like. The range bound trading on oil. Watch for rollover after today's trading session. All right. So that's about it, guys. fairly quick run up here this morning, but we'll see. So back to the ES, and for me, it looks like okay, we're still holding. So let's see if we get that continuation to the upside, and the market is going to see some sort of continuation from Friday, or if they're just going to knock it right back down again. We'll find out here in the day as the day session kicks in, but we'll leave it there for now. So I'll wrap it there. I'll say good trading, and let's see you guys back at 11:30 for the next update. Ready, guys? Later.